Hey everyone, welcome back to the channel. In this video, I'm going to be talking about an easy money stock. This is an opportunity in the stock market that I found that has the potential for 144% returns. So if you're interested in this opportunity, stay through the entire video where I share what this stock is, why this opportunity is happening, and how I plan to make money off it. Before we get started, hit the like button to show some support for my channel. If this video gets enough likes, I'll know you like videos like this, and I'll know to bring you more videos like this. Also, before we get started, this is not financial advice. I'm not your financial advisor. Do not blindly do what I say. These are just my personal ideas, and if you want to look more into these opportunities, you have to do your own research. So now the stock I'm talking about is STMP, stamps.com. And if you take a look at the price chart on Friday, Stamps had a huge jump, jumping 63% in one day, from under $200 all the way up, now trading at $324. And for any longtime followers of my channel, you may remember I actually used to be invested in stamps.com. I invested in them back in 2019 after they had a huge drop after losing their contract from the USPS. I invested at around $35 a share. Unfortunately, I sold out way too early looking back. I sold out of the stock around $90, which I thought was fair value at the time. And then the pandemic happened, and so the perceived value of a company like Stamps skyrocketed. Stamps mainly deals with electronic postage, so obviously they got a big boost from the stay-at-home lifestyle that has been adopted over the past year. So why did Stamps have the huge jump in share price on Friday? The answer is that they are being acquired by a private equity company called Thoma Bravo. And here's an article from the Wall Street Journal: Stamps.com to be bought by Thoma Bravo in $6.6 billion cash deal. So Stamps.com is being acquired. This is pretty common to see when a company gets acquired. The stock price will usually jump up around where the buyout price is going to be. Now, if we take a look at some more details of this deal, this will be an all-cash deal that values Stamps at around $6.6 billion. Stamps.com stockholders will receive $330 a share in cash. When the deal is complete, Stamps will be a private company, and the deal agreement includes a 40-day go shop period, which expires August 18th, which allows Stamps.com's board and advisors to consider alternative acquisitions proposals from the third parties. And this deal is expected to close in the third quarter. These are all important details we will come back to. Now, if you're wondering how we can make money from this, this is actually a strategy that Warren Buffett used to employ back in the day when he was running his partnership. He called these workout situations, and this is actually a strategy he employed widely and is one of the main factors in what helped him vastly outperform the Dow Jones when he was running his partnership. And so here's a quote of what he says about these opportunities from his 1965 partnership letters. He says that these are securities with a timetable, and they come from some sort of corporate activity, whether it's sellouts, mergers, reorganizations, or spinoffs. This category is not talking about rumors or inside information. Instead, it is publicly announced activities, and the risks of these type of investments do not pertain to general market behavior, but instead is something specific with the situation, such as antitrust, negative government action, stockholder disapproval, or withholding of tax rulings. And even though the gross profits in these workout situations may appear quite small, it's like looking for parking meters with some time left on them, but the predictability of these coupled with short-term holding periods produces decent average annual rates of return after allowance for the occasional substantial loss. All right, so this is a strategy that Warren Buffett used to do very often when he was running his partnership. He doesn't do it anymore. Obviously now he has way too much cash to be looking for these little opportunities, but for smaller investors like you and me, they can still be very profitable opportunities. So in my opinion, there's two ways to make profit off of this move. The first one is to just buy the underlying stock of Stamps.com, and you'll earn the spread between the current price and what the buyout price is. Currently, Stamps.com is trading for around $324. If you remember the details from the deal, the buyout price will be at $330 a share. So if you just buy Stamps.com at $324 and wait until the deal closes and until you get $330 per share, then you will be making 1.78% on that spread. And if you remember, this deal is expected to close in the third quarter. We'll call that 1 quarter from now. So if you annualize that 1.78% spread, that brings you up to a 7.1% annualized gain. So a 7.11% annualized gain is not bad at all. Not anything to scoff at. And so that is method number one to make money off of this opportunity. Obviously, this is not risk-free. The risks are, one, that the buyout takes longer than expected. This wouldn't lower your absolute return, but would lower your annualized performance. If the deal takes longer than 1 quarter to close, your annualized gain will go down. And the second risk is that there's a large potential loss if the buyout fails. If for some reason either of the sides back out of this deal, it's pretty likely that Stamps.com stock would have a pretty substantial decline. Usually in these situations, the stock would fall back around the level it was trading at before the deal was announced. Obviously, the stock jumped 63% on this announcement, so that is a pretty big drop to get down to where it was trading prior to the announcement of the deal. Now, this actually wouldn't be my preferred way to take advantage of this opportunity. Even though a 7% annualized return is not bad, I'm going to show you a method that allows you to juice those returns using options. So the second method to make money with this opportunity is with an option spread. So if you don't know anything about options, I'll link my playlist up now with all my options videos, and there's also plenty of other videos on YouTube to learn about options. So definitely go check out those first if you feel lost in this explanation. But essentially what I'm planning to do is open a credit spread on Stamps.com. Now for these options, I'm looking at the August 20th expiration. That's 42 days from now. And one way to trade an option spread on this position is to do a put spread. The way that these spreads work is that you choose a strike price to sell an option. As long as the stock price remains above the strike price where you sold the put, you get to keep the profit you receive from that spread. So if I'm someone that expects this deal to go through and I expect Stamps stock to stay in a pretty close range around the levels it's at now, what you could do is sell the 310 put and then buy the $300 put. Doing this allows you to hedge your bets in case for some reason the deal fails and the stock falls below the strike price, and that's important because it limits your losses. So if we plug this trade into the options calculator, what you get is you would get a $70 credit. The options calculator that I used calculated the mid price a little differently than this options chain. So that's why the numbers are going to be a tiny bit off, but it's estimated that you'd get a credit of around $70. Your maximum risk would be around $930 if the stock is below $309.30 at expiry. Again, all of these numbers may change slightly, so it's important to check these. And so if you did this spread, you'd make a 7.5% return off of the maximum amount you're risking, which in this case is $930 per contract. And the expirations for these options are only around 1 month away. So if you annualize this, this brings you to a 90% annualized return, obviously much better than the 7% that could be achieved by just buying the underlying stock. Now, a different spread you could trade with the stock is a call spread. This is in effect betting that Stamps will stay below a certain price. So the buyout price is reported to be $330, and if you think that the stock is going to stay below this price or even might go above a little bit, that there won't be any higher bidders and this deal will be the one that the Stamps accepts, then there's a pretty good chance that Stamps will stay below $330. Taking a look at the options chain, an opportunity for this would be to sell the $350 call and then buy the $360 call. Again, these are still at the August 20th expiration. And if you did this trade, you'd make around a $38 credit. Your maximum risk would be $962. The break even at expiry is around $350.38. And so in this scenario, the returns are a little less, 3.9%, and if you annualize that out, that is 47%. However, this last strategy is what will allow you to earn the highest potential returns while still limiting your risk. And that is to do both of these spreads at the same time. This is in effect an iron condor where you're selling both a put spread and a call spread. And if you do this, as long as the stock stays between $308.92 and $351.08, you will be profitable on this trade. And the beauty of this type of trade is that you collect premiums from both spreads, however your max risk stays the same. Because in the worst case scenario, either the stock price goes up past the strike price of your calls or down past the strike price of your puts. It can't do both at the same time. So if you open both of these spreads, you'd be receiving around a $108 net credit. Your maximum risk would be $892, and so this would bring you a 12% return based on the capital you're risking. And if you annualize that out, that is 144% annualized returns. Obviously, this is not risk-free. There's risks with this strategy too. One of them is that if the buyout fails and Stamps falls below $309.30, then you're going to have a loss. And And another risk is if there's a bidding war for stamps and they actually get a higher offer than the $330 that is the offer now. And if stamp stock goes above $350.38, that would also be a situation where you would lose money. But overall, in my opinion, this is a relatively low risk way to make some returns in an otherwise overvalued stock market. So let me know what you think about this opportunity in the comments. Let me know if this is something you're going to look into, or if you don't even like options and you like sticking to investing in fundamentally good companies for the long term. That is definitely my primary focus in investing, but sometimes I do like to look for opportunities like this to make some extra returns in the stock market. So this is the opportunity I wanted to share with you in this video. Again, if you found value out of this, hit the like button to help out my channel. Subscribe if you haven't already and you want to see more videos like this. So that's it for now, and I'll see you on the next video.